If you are a homeowner here in Phoenix metro area, you've likely realized something incredible. Home value increases. Whether you've been watching Phoenix homes for sale in your neighborhood or you've used a home value estimator recently, the numbers are likely looking very good for your net worth. But here is the dilemma I hear every single day as both a real estate and mortgage broker. I have all this equity and I really need cash for home improvements or to consolidate some debt, but I have a unicorn interest rate from a few years ago. If I touch my mortgage, will I lose that rate? It's a valid concern. Nobody wants to trade a historically low interest rate for current market rates if they don't have to. The good news? You don't always have to. At Equity Star Realty and Desert Capital Services, we provide a one-stop real estate solution. Because I handle both the real estate sales and financing, I can show you exactly how to tap into that cash while protecting your financial foundation. The core dilemma: cash versus cost. Most homeowners think their only option to get cash out of their home is a refinance. While a cash out refinance is the go to move, the strategy has changed. If you are sitting on a mortgage rate that is significantly lower than current market rates, a full refinance may not make sense. This is where the distinct advantage of working with a dual licensed expert comes in. I look at the blended rate of your debt to ensure you aren't making a move that creates long term financial stress. Option 1: the cash out refinance. A cash out refinance is when you replace your existing mortgage with a brand new one for a larger amount than you currently owe. You pay off the old loan, and the difference is paid to you in a lump sum at closing. When a refinance makes sense, even with the desire to keep a low rate, there are times when a refinance is the right move. If you are carrying significant credit card debt with double digit interest rates, even a new mortgage at current market rates might be cheaper than the blended interest you are paying across all your cards. Removing private mortgage insurance, or PMI. If you are a first time home buyer who put down a small down payment, your home's value increase might allow you to drop PMI while getting cash out, which can offset a higher rate. Simplification. Some people simply prefer having one single monthly payment rather than managing multiple loans. The biggest hurdle is that you are refinancing the entire balance. If you owe $300,000 at a low rate and you want $50,000 in cash, you are now paying current market rates on the full $350,000. That can add up quick. Option 2: the home equity loan, the second mortgage. A home equity loan is a separate loan that sits behind your primary mortgage. This is an option I recommend to many of my clients when touching the primary loan isn't beneficial. By taking out a home equity loan, you leave your current primary mortgage exactly where it is. You only pay the current market rates on the specific amount you are borrowing. Generally, the closing costs on a home equity loan are lower than a full refinance. These loans can often be processed quickly, getting you the funds you need for those pressing home repairs. In many cases, if the funds are used for home improvements, the interest may still be tax deductible. Always consult your CPA. The integrated advantage: real estate plus mortgage. Why does it matter that I am both your realtor and your mortgage broker? Because your home is your largest financial asset, and you shouldn't manage it in a vacuum. When you work with Equity Star Realty, we don't just put a sign in the yard. We help you understand your equity position. When you work with Desert Capital Services, we don't just push a loan product. We vet your financial situation to see if borrowing is even the best move for you. For sellers, this dual expertise means we can vet the mortgage pre-approval of every buyer who makes an offer on your home. We know how to spot a weak approval that might fall apart in escrow, saving you from sleepless nights and wasted time. For buyers, especially a first-time home buyer, we provide a seamless path from finding Phoenix homes for sale to securing the keys with a loan that actually fits your budget. Key factors to consider before you decide. Before you sign on the dotted line, you need to ask yourself a few questions. 1. How much equity do you actually have? Most lenders will allow you to borrow up to 90% of your home's value. combined across all loans. If you aren't sure what your home is worth, skip the generic home value estimator and contact me to get a reliable number. 2. What is the blended rate? This is the secret sauce of mortgage planning. If you have a primary mortgage at a low rate and a secondary loan at a higher rate, what is the average? If that average is still lower than a total refinance, the home equity loan is your winner. 3. What is the end goal? Are you fixing the house to sell it, or are you staying for 20 years? Your time horizon changes the math on which loan is better. If you're selling soon, you want the lowest closing costs possible. Your one-stop solution in Arizona. The Phoenix market is moving fast. Whether you are looking at featured listings or trying to figure out how to pay for a renovation on your current home, you deserve an expert who sees the whole picture. I'm here to take the stress out of the process. No more calling 3 different people to get one answer. From the moment you think about how can I get some cash, to the moment you decide to sell your home, I am your primary point of contact. Ready to crunch the numbers? Don't guess when it comes to your home's equity. Let's look at your current mortgage, your home's current value, and your goals to find the path that keeps the most money in your pocket. Contact me and find out what your options are today.